Welcome back. You're watching ET Now, and this is earnings with ET Now. And Reliance Industries came out with its earnings in the evening. The numbers are pretty much in line with street expectations. If you look at the retail EBITDA margin, it seems to be a little under pressure with 7.1% EBITDA margin compared to 7.5 on a quarter-to-quarter basis. But the growth has been led by OTC, and there has been improvement in the telecom business, where the ARPUs have gone up to 213.7 per user per month. There you have the numbers on your screen. EBITDA margins are up 0.3% on a quarter-to-quarter basis, but EBITDA is up 0.3%. EBITDA margins have fallen slightly on the back of that pressure coming in. In the O2C business, oil and gas is slightly weak because of the lower output which is there. But Petcom is something which is helping Reliance go through this quarter there. So to take you through the numbers, you have the numbers which is basically the revenue from operation is 2.69 lakh crore versus 2.58 lakh crore. There's a slight jump which is pretty much in line with what street was expecting there. Profit after tax comes to is pretty much flat at the reported numbers at 22,167 versus 22,146. So it's pretty much flat there. Do we have a guest? We have Gaurang Shah who is joining us today. Gaurang, hi, good evening. How do you look at the first set of numbers coming in from Reliance?
Well, I think more or less in line, barring the refining business and oil and gas business, there's been a slight downward tick. I guess it should be one-off. But on the telecom front, on the oil to chemicals front, on the retail front, they opened up record number of stores on the retail front. And even the ARPUs are up by almost about 5% plus, which is and of course the subscriber base at a record level. So I guess this should improve as we go into the fourth quarter in the next financial year. I don't think one needs to complain about the numbers, whatever is flashing in front of me right now as I speak to you.
Naveen, what's your first take on the numbers coming in from Reliance?
Yeah, so overall the numbers, if I were to look at the segmental EBITDA, I would say that they're kind of in line. So we were expecting around 16,500 in O2C business. That's about there. The upstream business around 4,800. That number is similar. Of course, Jio numbers are a slight beat to what we were expecting. We weren't expecting a serious ARPU uptake. So the ARPU number looks good. Overall, the numbers look broadly in line. I would say okay. But let's say the consolidated EBITDA is what we have to work out. I think expectation was in the range of around 48,000 crores. So between 48 to 50,000 crores, maybe that number seems to be a slight miss, right? So we have to look at that number, why it's happening. Third is the retail EBITDA. I would say that number is not particularly great. So around little lower than 7,000 crores. I would say that's not a very, very encouraging number. But of course, there have been higher number of store openings, although those things would have led to costs. So overall, in line set of numbers, operating performance looks fine. So I would say that decent set of numbers.
Gaurang, retail EBITDA margins are slightly under pressure, even though they have been able to open nearly 431 stores in the quarter. Do you think the split of festive shopping between Q2 and Q3 could have led to that?
It could be because we had an early festive season. There could be but the downtick is not a large gap. It's marginally down, so I guess I would take it as one-off. And with the kind of run rate of new stores opening, I think they are almost added about 430 plus new retail stores, which should possibly start contributing to the top line and bottom line in the fourth quarter and, of course, going into the new financial year. So I would possibly read it as a slight miss and one-off.
If you look at retail margins, it has fallen on a quarter-to-quarter basis, and I think that was something which even the street was expecting after we saw some kind of indication from Trent that retail margins could be under pressure. Do you see this under pressure margins to continue into Q4 as well? Naveen?
Yeah. So retail margins, I think Q4 we'll have to look at. Q4 is of course a shorter quarter, so need to look at how the numbers will pan out. But the whole impact of costs of the 431 opening stores will be there in Q4. So maybe the margins could still be under pressure in Q4.
And how do you see the fact that the IPO for Jio is expected in this calendar year, or at least that's what the reports are? Do you see Reliance looking to increase tariffs, telecom tariffs in the next few months to push up margins as well?
Yeah, so Jio, I think, is a very straightforward business, right? It's anyways a very highly concentrated market, and tariff hikes is a factor of timing, right? When the market leader chooses to raise tariff based on multiple factors. So tariff hike is not a major issue for a company like Reliance and for the sector. So tariff hikes should come in. That's very, very likely. Importantly, the EBITDA numbers in this business continue to look very, very strong. The cash flow generation continues to improve. So I would say that Jio IPO, I think in the next 1 year, seems extremely likely and should fetch a reasonably solid valuation is what I expect.
What's your view on Jio? ARPU's up as per expectation. 213 is what the street was looking at. 213.7 is what they were able to log in Q3. Do you see for the run up for the ARPUs from here? Gaurang?
Sorry, I thought it was for Naveen. Well, according to us at Geojit Investments, we believe that we are looking at one more tariff hike, possibly in the second half calendar year, which will definitely take the ARPUs upwards. And the fact that, Jio has got a huge subscriber base, and a large part of that subscriber base are basically 5G users, where data consumption is also at a very high level. You could see it moving upwards, northwards in the coming quarters. And if the hike is, I don't think it's going to be a substantial hike in the tariff, but that's what exactly even, the management of two large telecom service providers in India, Jio as well as both of them said in the second quarter of something thereabouts, they are looking at the tariff hike. So 2026. 2026 might end upward tariff, and that could take the ARPUs upwards.
Naveen, if you look at the Capex for them, it's at 33,826. It's fallen marginally on a quarter-to-quarter basis. Do you think that from here on Capex will slow down, and they've already hit the peak, and now it will be a downhill from here as they move towards completion of other projects in the new energy and other new ventures which they are looking at?
Yeah, that's a possibility, right? So something the new ventures also, we could be seeing some bit of sluggishness in terms of what they would spend. Also, let's say the core businesses, let's say the O2C business, there of course not very, very serious, very, very large projects seem to be there, right? And of course, Jio, of course, we will continue to see maintenance Capex, but that Capex continues to be at a certain run rate, but as a percentage of revenue will come down, right? So Capex on an overall basis, I think should stabilize, maybe could downtrend a little bit, but not very, very serious downtrend can be expected. It could stabilize around about these levels, maybe slightly lower.
We've also seen, cash and cash equivalent going up this quarter for Reliance. While outstanding debt on a gross basis also falling by nearly 2,000 odd crores. Cash improvement seen in this business, especially led by O2C, do you think that the cycle of Petchem is coming back now, because in Q2 we saw some kind of pressure coming into Petchem?
Yeah, so cash levels, of course, are bound to rise, right? This is a company which generates a lot of cash. And obviously, the huge projects that have been planned and that have come through, Maybe the cash levels could rise also from current levels significantly, but of course they have debt to repay. So many things which can happen, right, in the forthcoming quarters. So the cash levels are likely to rise from current levels. Operating performance, I still believe there is some bit of improvement which is very much possible, especially in the O2C business. So with that happening, there could be large amount of cash which can happen in the next couple of quarters.
Do you see a petchem cycle reviving, Gaurang, for Reliance? Means especially in the domestic market, there was some pressure with respect to pricing. Do you think that that pricing pressure would now ease off for Reliance?
Looking at the demand going forward, our sense is that this pressure should possibly reduce to a great extent. And of course, with the kind of investment that Reliance has planned across verticals of business that they've got, I think as and when we see this incremental investment coming through in different business verticals, we should see a steady growth coming through. So I think petchem margins should be in a better shape, not immediately in the fourth quarter, but possibly in the next financial year.
Okay. Okay. My final question to both of you is with respect to the retail segment. There, we saw demerger of the Reliance Consumer coming in this quarter, getting completed. There, do you see, while they've been adding a healthy number of stores on a quarterly basis, the margins are likely to be under pressure? Gaurang, to begin with.
Yeah, so see, the fact that you need capital investment when you go and reach out to retail investors. My conclusion on this is that as and when you have footfalls coming in and the retail store starts contributing, this will add to the positivity as far as the top line and bottom line is concerned. Initial phase, when you do an Capex as far as retail is concerned, or you add more stores, there will be capital expenditure which may put pressure in the short to medium term. But once you have the footfalls and you have the numbers coming through, this should add to positivity.
Naveen, your take on the retail business, do you think that, as it scales up the business, it should be able to get better margins from here on?
Yeah, so I think that's a possibility. Again, retail business is a lot dependent on the same-store sales growth and how the operating leverage kicks in. In an expansion phase, even to maintain these kind of margins is a tough challenge. So that I would say that they have been able to do it. So that's something which is serious. I would say that hallmark of their ability to manage such scale and still deliver a reasonable margin. So that's something which is a strong positive for the company. However, we'll have to see how much they can actually generate, right? So if I were to look at, let's say, an overall enterprise value for Reliance Industries at, let's say, around 1,800 odd rupees, which includes everything, including the debt part, where I would say that retail is roughly little over 1/3, right? So from that perspective is where the business is dependent on growth, and they have to improve the margin profile a little bit, because after a certain point, the number of store additions, everything is going to slow down, right, on the base. So margin improvement is going to be a critical factor. So, and operating leverage should kick in. I don't see that happening in the next couple of quarters. Maybe end of FY27, we should see the margin levers starting to kick in.
Do you agree with Naveen that retail will take at least a couple of quarters, or at least the end of FY27 to bring in that leverage of scale and margins?
Well, it could take a little bit longish time, absolutely no denying. And, you have to look at the two parts over here. One is, of course, the kind of competition that exists. And the second one is, of course, the kind of acquisition you do. I think both these things, with the kind of, cash war chest that Reliance has got, I don't think that's going to be very, very difficult. But yeah, given the competition and elevated levels, you need to attract customers. You need to have a large large customer base over here. It could get stretched a little bit, but I think once, like I mentioned, once the contribution starts coming in, things should look much better.
If you look at the Jio platforms numbers, especially the numbers which are coming from Telecom, over 8 million of net subscriber additions coming in this quarter. 505 million 505 million subscriber base with 5G at over 250 million and broadband at 225 million. Despite that huge addition which is coming in on a quarter, the ARPUs are not able to rev up for Jio. What could be the reason for that?
Yeah, again, on the ARPU side, see, typically India ARPU don't necessarily move up based on consumption, right? Because we have fixed packs and stuff like that, right? So from that perspective, tariff hike is what essentially moves the ARPU significantly. Second is obviously people moving from lower packs to higher packs, and that in case of Jio, most people are already on data plans, right? So from that perspective, for them to move the ARPU significantly is a challenge. Of course, they have to get more postpaid subscribers. Those are all factors which they would be also playing. But core ARPU improvement will happen with tariff hike is what I feel. A meaningful improvement, which I think maybe a couple of quarters away or depends on when they decide to do it. But essentially, uptick will happen with tariff hikes. Without that, it will be a very slow, gradual improvement over a course of a few quarters.
If you look at the stock price of Reliance from the beginning of the month, it has corrected nearly 5 to 6%. Do you think the numbers are good enough to give a good support for the stock at the current level?
Yeah, so from stock price perspective, there are multiple factors which have an impact on Reliance. From the numbers perspective, I don't see a meaningful change in the earnings estimate. Last quarter numbers were, of course, quite good, so which did help the stock. This quarter numbers, I don't think so, are going to have a serious impact on the stock price in the immediate term. So I don't see any serious change in the stock price movement or expectations of analysts based on these quarterly numbers, and more likely the stock is likely to remain range bound based on these numbers. I don't see a meaningful uptick happening from Reliance based on the quarterly numbers.
Gaurang, your view on this?
Well, difficult to give a short to what will happen to the stock when we get back to trade on Monday morning. But as a disclosure, our fundamental team has a positive coverage on Reliance Industries for a pretty long period of time. And look, Reliance is a company which is now into different businesses. To expect any kind of short to medium term move, it's very difficult for me to comment. Long term, we remain extremely positive as far as the growth is concerned and the delivery of numbers are concerned.
Gaurang and Naveen, thank you very much for joining us today on ET Now and giving us your perspective on the earnings for the Reliance Industries numbers, which are pretty much in line with street expectation, especially the ARPUs are in line, and the street was expecting some kind of softness in the Reliance retail numbers, especially on the margin front, and that too has come through. With some pressure coming in the margins, and O2C business seems to have done pretty much in line numbers there. So it's pretty much in line numbers for Reliance. Let's see how the stock will react on Monday. Thank you for watching earnings with ET Now, and we'll step into a break now.